We are about to have a retirement crisis in America. Over 12,000 people are turning 65 every day in 2024, and most are financially unprepared for retirement. So today, we're going to look at 7 of the most alarming stats around retirement and what you can do to ensure you do not become a part of this retirement crisis. So let's start strong. Stat number 1, 33% of Americans have zero savings. Nothing, nil, big zero. It's a bold strategy. Now, we can all figure out really quickly that that's just flat out not going to work out. Very few people truly have pensions and fixed income sources later in life and retirement that's going to actually supplement you not having any savings at all. Now, this parlays perfectly into frightening stat number 2, which is that of those over 65 that are retired, about 10% live below the poverty line. And what's scary is that if you remove Social Security, over 40% of retirees over 65 would fall below the poverty line. For the most part, people just flat out do not have the savings to fully support themselves in retirement. The next stat is about cash flow and liquidity. Over half of Americans between age 55 and 64 could not afford a $2,000 emergency if it came up. Now, this is frightening because this is one of the baseline principles of personal finance. Is getting an emergency fund. It is like step 1 of any type of breakdown. Get something like 3 to 6 months of your living expenses in some type of cash account, whether it be just your bank account, a high yield savings account, something, because emergencies come up and it's very unfortunate they come up when you least expect them. That's why they're emergencies. And this doesn't change just because you're retired and not earning an income anymore. You still have car repairs and roof leaks and things that go wrong with home and living expenses. It's important to have some type of liquidity. And all studies and surveys show the more you can afford an emergency in terms of this cash outlay, something that crops up in a week or so, the more confidence you have, the more peace of mind, and the less stress you have around your money. Now, once you have some type of emergency fund set up, a good rule to follow is to now look at starting to invest. But as you'll see from this next stat, most people also aren't doing that. Stat number 4 is courtesy of Gallup's research, which shows that 39% of people do not own stocks. So almost 40% of people are flat out not investing. It's really tricky because, as you'll see, a lot of these stats refer to people's cash flow. Oftentimes, and many people just aren't earning enough income to be able to truly have discretionary money to save at the end of each month. So I get it. It's why a lot of people are not actually investing. They're saying there's nothing left to invest. But you have to find some sort of room in that budget to invest, because it is almost impossible to build any sort of retirement stability or financial independence without investing. You cannot just save your way in cash to actually get to a point of financial freedom. There's just no avoiding that fact. Now, if you're part of the 39% and you look at yourself and you think, I don't own stocks, I'm not investing, start simple. Start with maybe some type of employer covered plan like a 401k or a 403b or a TSP. Start with an IRA, an individual retirement arrangement account. Start with some type of brokerage account you can open up. Just getting investing and starting these behaviors as soon as you can really compound and grow a lot more than you realize. Number 5 is around our savings rate. Currently, right now, we're near all-time lows when we track personal savings rates in America. It sits at 3.4%. So people are saving 3.4% of their net income. This aligns with other surveys that show about 75% of people feel like they're living paycheck to paycheck. It's almost impossible to save if you are living paycheck to paycheck. Now, in a recent video, I broke down exactly how much you need to save and how, depending on that savings rate, how long it will take you to retire. And what you see is that if you're saving about 4% or under, it's expected to take you over 5 decades to build up enough savings to retire. Now, that's a crazy stat, but it aligns when you look at all these different stats. You're seeing the common theme is that most Americans don't have savings. They don't have savings because they're not investing, and they're not investing because they don't have discretionary savings at the end of each month. But you have to try to look at what you can possibly do to save a little bit of money to start investing at a higher rate than 3.4% of your income. That is not going to build any type of financial stability or any ability for you to retire in the future. Stat number 6 is sort of a culmination of the first 5, which is that the median retirement savings of a 60-year-old in America right now is $185,000. Now, even when you look at adding in Social Security income to that as a base, that is just not going to be enough to cover the average expenses most Americans have. So this is that culmination of the previous few scary stats and showing that for the most part, more than half of 60-year-olds in America are going to have $185,000 or less saved up for retirement, not putting themselves in a true financially independent position. Frightening stat number 7, I think, sums this up perfectly. And this was a study done by Transamerica and showed that nearly 3 in 4 retirees regret their past money decisions. So 73% of the respondents look back with regret on the decisions they made, the savings patterns they had, the investment choices they made. This is just a huge number. But it makes sense when you look at the financial stability and this retirement issue we have upcoming. Most people are not putting themselves in a great position to retire, as we see with these stats. And so now that they're actually there, as I hear a lot of people say, they just always thought that there was more time. Always thought there'd be time to catch up. Make up for those savings I took out, make up for that 401k distribution I took, or the fact that I wasn't saving. But oftentimes you put things off and then it just keeps adding up. A week turns into a month, turns into a year, turns into a few years of these decisions. So I'm not surprised to see, it's unfortunate and it's sad, I'm not surprised to see that almost 3/4 of people are regretting their past money decisions. So if you feel like you are one of these statistics, hopefully this might scare you a little bit into looking at some of the choices you have to make. Can you get things on a better path moving forward so that you don't become one of these statistics? Thanks for watching. I'm Peter Campbell, the lead advisor at Bull Oak. We're an independent financial planning firm based in San Diego, but we work with clients all across the country. If you want to learn more about how we help our clients, check us out at bulloak.com. Thanks.